One of the key things that we recognize is that there's going to be three headwinds coming into and going into next year. The first one is the talk about tapering. The second one is, just the duration of inflation and that lasting a bit longer than expected, and the peak in growth rates. For that reason, we are, slowly taking down some of our risk. We still think equities is still one of the key asset classes that will perform well in this environment. However, we've just become a little bit more cautious in terms of how we're positioning ourselves going forward, based on those three headwinds that we expect could have increased volatility on markets and even potentially flatline markets from this year into next year as well.
Very good morning. Tavi joining in this conversation. It's interesting to see that you like Japanese equities right now. Given what the region is going through economically, what's your positioning here in terms of what you're looking to buy, where is the interest, and what's the upside?
Yeah, so our two main convictions, I think, in terms that are worth highlighting, are European equities. We are starting to see more robust reopenings in Europe, the vaccine rollout, and as even the World Bank report has mentioned, that the vaccine rollout and vaccine distribution is key and is critical for the recovery. We're seeing a pickup in pace in Europe, and that should be supportive for a lot of the more cyclical markets in Europe. So there, we like European small caps, and we also like Spanish equities as well, which should benefit from the reopenings and reopenings happening at a quicker pace. When it comes to Japan, we see Japan as your, global growth proxy, and global growth is going to still continue. Again, we heard from the World Bank report that they expect global growth to be quite strong in 2021. So Japan is a play on that, and is a focus on that part of the conviction that global growth should continue and should be robust as reopenings continue.